Hello, I'm Stephen Ho, trader and founder of The Stock Punter. So you want to get into Forex trading, but you're a bit unsure where to start. You want to dig in, find out some more before committing, or maybe you just want to learn what Forex is all about. Anyway, now my quick and very quick 7-minute guide should give you all the information you need to start you on your Forex trading journey. Now, if after that you want to learn some more, please visit my website www.thestockpunter.co.uk or follow me on this YouTube channel. Now with that, let's crack on with the guide. So what exactly is Forex? Well, it's also known as FX, currency market, foreign exchange market. Well, it is the most liquid, largest financial market in the world, with an average daily turnover of roughly $5 trillion, and it works pretty much 24 hours a day except for weekends. And the biggest physical location for FX trading is London, with about 41% of the market. Now this is very important to understand, that foreign exchange trading doesn't work through an exchange like, for example, stocks or commodities. It works through financial institutions, banks, hedge funds, those type of guys, and they make up about 85% of the market. It's also very important to understand what the key markets are and their opening hours are, because as we know, 41% trade through London, so you can expect a lot of noise and action there. The second biggest market is New York with about 20%, so again that one's going to drive a lot of price action. Now the four biggest markets, probably Australia, Tokyo, London, New York, and the key times you're going to need to know: roughly 6 AM to 10 AM, that's GMT. In the US it's 1 PM to 3 PM GMT, and then it goes a bit quiet 8 till 10 PM GMT, and like I said, weekends are dead. Market closes at 11, reopens at 11 on Sunday. Now there's various financial instruments used to trade FX, the biggest one being spot. You can also use forwards, futures and options, but spot really is the biggest market. What does spot mean? Well, that's the physical exchange of currency as it happens on the spot, i.e. right now. So what are these financial instruments trading? Well, in the world of Forex, that's called pairs, currency pairs. All currency pairs have two currencies that make up that pair. Now the first currency in the pair is called the base currency, and the second currency can be either called the counter or the terms currency. So the quote then that you get for a price in the Forex world is for how much of the counter currency it takes to buy one of the base currency in a pair. For example, if we're looking at the pound against the US dollar, if it's trading at 1.5, that means that 1 GBP is worth 1.5 US dollars. Now a quote for a Forex pair is normally given to 4 decimal places, but there are some exceptions. If you're dealing with Japanese yen, that's to 2 decimal places, and there are some that go out to 5 decimal places like the Norwegian and Swedish krona. So you may hear the term pip used in the world of Forex, and this is very important to understand, and it's really how your profits and losses are measured in the Forex pips, and it simply means the smallest value price increment a currency can make. So how can you determine whether the currency pair you're trading is bullish or bearish? Well, you've got to look at the price direction. So if the exchange rate is rising, it means that the base currency is strengthening against the terms currency, and vice versa for if it is bearish. Now when you start trading, you're going to be given your currency pairs in a quote form that's split into two. One side is the bid and one side is the ask. That's the buys and the sells. Now in this example here, we've got GBP against the Japanese yen, and we can see the price roughly 150.84, 150.91. Now the gap in between that 87 and 94, which is 7 pips, that is the spread and that is basically what the broker is making out of that deal. Now the spread will vary according to the currency pair that you are looking at, and that can be because of volatility, liquidity, the risk to the broker, the time of the day, many variables that go into whether it is wide or narrow spread. But you can pretty much gauge that the more liquid, the more popular the currency pair, the lower the spread is. So what currency pairs can you trade? Well, the largest traded pair is the euro US dollar with about a quarter of the market, then the yen, and then the pound. There are a key group called the majors, which are the big boys like euro, pound, yen, Swiss franc, Australian dollar, New Zealand dollar, Canadian dollar. And then there's various other groups like commodity currencies and cross currencies which involve euro, yen and pound. For example, GBP ZAR would be a cross currency trade between the South African rand and the pound. Now I hear you ask, how can you actually trade Forex? Well, you're going to need to open a broker account, and it's going to be free, and it should be free to open such an account. And depending where you are in the world, there might be some local regulatory issues that prevent you from trading certain forms of Forex. But if you hit my website www.thestoppunter.co.uk, I show you who we use and why you should use them, and give you a cheat sheet on selecting the broker best for you. Quite simply, Forex trading is great in both the short and long terms. It works fabulously well with technical analysis. It produces repeatable trends. The price can be driven by many variables. The fundamentals such as trade balances, budget deficits or surplus, interest rates, political events, central bank intervention, inflation, wealth, GDP, health, unemployment, retail sales, durable goods. The lot can all impact where a exchange rate is going next. Now it could also be driven by the technical analysis, algorithmic trading, and most importantly, if you're a day trader, then you want to pay real close attention to the economic calendar and news events, as they are one of the biggest intraday pushers of the price. The Forex market really is a great one to trade. There's plenty of accessible research, resource and info out there. And if you'd like to learn more about FX trading, again visit the website www.thestoppunter.co.uk, and I discuss there brokers, technical analysis, courses that you could get involved with, and other free resources. And also don't forget to follow us on YouTube. Now if you've liked today's video, please give us the thumbs up, and don't forget to hit the subscribe and bell buttons to receive future notification of content I'll be producing just like this. So all that's left for me to say is thanks for watching and good luck with the trading, and I'll see you in that next video.